This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Where there's smoke, deal buzz lights up tech, tobacco, and media. Tonight, the reshaping of American business.
Tale of two blue chips, why investors cheered McDonald's quarter but jeered General Electric's.
And business sense. Meet the woman who pioneered the home fragrances industry and ended up making millions. Those stories and more tonight on Nightly Business Report for Friday, October 21st.
Good evening, everyone, and welcome. Numerous reports tonight of big corporate mergers, very big. The combined price tag of all would be in the 9 figures. So let's begin tonight with a potential get-together of two very familiar names, AT&T and Time Warner. Such a deal would reflect the fast consolidation of the media, communications, and internet industries. The acquisition of Time Warner would give AT&T control of a lot of popular content, including CNN, HBO, and valuable cable channels. The speculation sent shares of Time Warner up more than 7% and AT&T lower by about 3%. But the deal isn't done yet, and there are additional reports that even Apple may be interested. Media companies think bigger is better these days, and a merger of AT&T with Time Warner might be the biggest of all. Adding AT&T with a market cap near $233 billion to Time Warner at about $68 billion would create a media powerhouse, bigger than Comcast, the producer of this program, and bigger than Disney, 21st Century Fox, and CBS and Viacom. Those last two are reported to be in merger talks too. AT&T Time Warner would be the biggest media deal since Comcast bought NBC Universal in 2011. In this case, AT&T would get Time Warner content from HBO, CNN, TNT, TBS, Warner Brothers, the Cartoon Network, and others. AT&T, known for its telephone, wireless, internet, and satellite services, is looking for growth. It tried to buy T-Mobile in 2011, but regulators killed the deal. Now it's looking at video, which accounts for most of the content pushed through its pipes. And that's why it bought DirecTV last year for about $50 billion, instantly making AT&T the biggest player in pay television.
When you think about how content is being consumed today, well, more and more of millennials are consuming content over tablets, over their smartphones. And really, when you think about that opportunity set, there's a tremendous opportunity to push content.
Companies like Apple, Google, and Verizon are all aiming to get into the streaming game. Risk? Media bets carry plenty. In 2000, AOL bought Time Warner for $160 billion. At the time, it was the largest corporate takeover ever. But the dot-com boom ended, and the two companies never got in sync. Today's Time Warner is a different company, though. CEO Jeff Bewkes has shaped a pure content creator. It sold AOL to Verizon and spun off Time Warner Cable and Time Inc., its publishing division. 2 years ago, 21st Century Fox tried to buy Time Warner, offering $80 billion. But Time Warner thought it could do better. So how much would AT&T need to make a deal work? Stay tuned.
Stay tuned indeed. James Dix joins us now to discuss whether or not an AT&T Time Warner deal would make sense. He's a media analyst at Wedbush Securities. That sounds, James, like as good a question, a place to start as any. I find it really ironic. I used to work for Time Warner, by the way of full disclosure. Time Warner recently spun off its cable business. It eschewed, backed away from this idea of marrying content and distribution. That is the very business model that AT&T seems now to be banking on, if indeed it bought Time Warner. So why does it make sense for Time Warner to do this, or AT&T?
It certainly may make more sense for Time Warner than it does for AT&T, especially if Time Warner is largely going to be a seller in this transaction. But I think you're right. You basically had a company, Time Warner, which has been talking to investors for a while about the advantages of spinning off and getting a cleaner corporate structure, more focus on content, as you noted, splitting out Time Warner Cable. Here, to some extent, this is an about face in terms of that strategy. Now, of course, it would be AT&T presumably driving that strategy. But vertical integrations like this, it seems difficult to see there's big synergies on their face. And also you have to, yeah, go ahead.
Well, you know, one of the issues that has been brought up by various analysts in this whole discussion is that if AT&T does want to go this route, that Time Warner is really the only player they could go after because it's the only one with a single class of stock. All the others have several classes of stock, and so it makes it much more difficult to do any kind of a deal.
Yeah, so I suppose that, that kind of begs the question of whether this is a good road to go down for AT&T in the first place. Once you've made that decision, then you can make the decision whether Time Warner is really your best option. And as you said, because it does not have super voting shares in many ways, it's the only option at this type of scale. That's one of the reasons why Time Warner is much more likely to be the subject of these types of reports and this type of activity than the other big media names in the space, because it lacks that super voting structure that might block a deal.
I assume that this would be done with a lot of debt. AT&T already has a lot of debt. If I'm an AT&T shareholder who loves that dividend and this company's going to have to take on a lot of debt, what does that say about the safety, if anything, of my dividend and the future of my stock?
Yes, I mean, I cover Time Warner. I do not cover AT&T. I guess what I would say is that one advantage is that interest rates are relatively low, so therefore debt is not, it can be more accretive in these types of calculations than it might be if interest rates were higher. But again, I think you really have to think about what the strategic implications are and what's the real benefit and plan, as opposed to just whether the numbers make sense in terms of an arithmetic calculation.
Quick yes or no. Does Time Warner need AT&T?
No, I don't think so. You could make an argument that having greater vertical integration allows for maybe a better bundle down the road, but Netflix did it without it.
All right. James Dix with Wedbush. Thanks.
Now on to deal number 2, which involves 2 chip makers. Qualcomm is reportedly near an agreement to acquire NXP Semiconductor for about $37 billion. That deal would make Qualcomm a bigger supplier to the automotive industry. It already supplies chips to smartphone makers like Apple. The move would expand Qualcomm's reach as the smartphone market starts to slow. The deal could be announced within days. Qualcomm is reportedly offering NXP Semi $110 a share. Shares of both companies moved in opposite directions.
And the third deal is in the tobacco industry. British American Tobacco made a $47 billion offer to buy the rest of Reynolds American it does not already own. Such a combination would create the world's largest listed tobacco company by both revenue and market value. It would also create the world's largest player in e-cigarettes and other vaping products. The deal would combine well-known brands. British American owns Dunhills, Kent, Kool, and Rothmans. Reynolds American owns Newport, Camel, Pall Mall, and who could forget, Grizzly Snuff. Shares of Reynolds American up 14% today. British American Tobacco shares down 4%.
Well, that potential deal news was not enough to lift the broader market. Stocks finished the week mostly flat, with consumer discretionary stocks the best performing sector. The Dow Jones Industrial Average fell 16 points to 18,145. The Nasdaq rose 15. The S&P 500 fell fractionally. For the week, the major indexes rose just slightly.
It was a sluggish quarter for General Electric. Despite topping Wall Street earnings expectations, the company missed revenue projections and cut its full-year sales forecast. GE's oil and gas business proved to be a big drag on those results, and that pressured shares, which fell fractionally in trading today. Seema Modi now with more on the company's quarter.
After a weak first half of the year, Wall Street was hoping for a rebound in revenue growth from the industrial giant. But weakness in General Electric's oil and gas business continues to hurt sales, prompting the company to lower its full-year revenue forecast. Analysts had been targeting second-half growth of about 15% in GE's power business, its largest division. In the third quarter, power revenue grew only about 7%. Goldman Sachs calling it a weak operational quarter. But despite the challenging environment, CEO Jeff Immelt remains positive of the company's long-term outlook.
The oil and gas team is executing well in a tough environment. We continue to aggressively manage costs while positioning for long-term growth. The business fully leverages the GE store and will come out of the cycle stronger.
GE lifted its cash flow outlook and announced a boost to its share buyback by an additional $4 billion. For Nightly Business Report, I'm Seema Modi.
Fellow Dow component McDonald's was one of the bright spots in today's session. Its quarterly earnings were better than expected, thanks to the popularity of its all-day breakfast menu. The results provided further evidence for investors that its turnaround plan is taking hold. The stock up more than 3% in trading today. Susan Lee has more on McDonald's results.
Three things that helped McDonald's in the recent quarter. One, preservative-free chicken McNuggets, which boosted sales by 10%. Two, Japan sales jumping close to 18% on promotions like Pokemon Go Happy Meals. And three, sustained all-day breakfast sales. Analysts have been concerned that the breakfast boost was fading as we push up against the one-year anniversary. Now the drags in the quarter. China saw sales fall on boycotts from the South China Sea ruling, which Yum also cited in their recent earnings. McDonald's, though, did mention on the earnings call that they are in the final stages of selling off their China, Hong Kong, and other Asia businesses, and they expect these sales to be completed by year end. Back here in the U.S., Golden Arches, like the rest, is trying to find growth in a restaurant recession, hurt by cheap grocery prices at their cheapest relative to restaurant prices in close to 30 years. McDonald's CEO Steve Easterbrook says a gap in prices is just one factor negatively impacting sales.
I think there are broader macroeconomic issues of consumer confidence and just uncertainty over wage increases. There's a slight squeeze on discretionary spend with gas prices edging back up and healthcare costs going back up. So I think those are the sorts of things that we see affecting customers.
Now, before today, McDonald's stock was down 16% since May and trading close to their lowest in a year. This quarterly report card, though, may change that momentum. For Nightly Business Reports, I'm Susan Lee.
Still ahead, what we know about today's massive attack on the internet that caused widespread outages.
A massive internet outage shut down or slowed major websites across cyberspace, sites like Twitter, Spotify, and Amazon. Dyn, a company that is responsible for routing the traffic requests, was apparently hit by targeted strikes. After the first attack was resolved, Dyn reported a second one midday and a third one later in the afternoon. Eamon Javers has been following the story for us all day from Washington. Eamon, do we know yet who's doing this?
We don't know who's doing it, Sue, but interestingly enough, what Dyn said today is that this is coming from tens of millions of different IP addresses all around the world. It's a global attack. It's what's called a distributed denial of services attack. And NBC News' Pete Williams did speak to a senior U.S. intelligence official today who said their initial assessment is that this is what's called internet vandalism rather than a state-sponsored attack. So at least early on here, they seem to be ruling out that it was Russia or China maybe behind it.
Who has the ability to influence those tens of millions of computers to do what they're doing?
Well, that's an open question, and we'll find out as investigators dig deeper into this. But the interesting thing here is that investigators at Dyn said that what they saw here was a botnet of devices that were hooked up to the so-called Internet of Things. So we think of these botnets as being cloned computers around the world that are used for these cyber attacks. In this case, though, they said it could have been things like DVRs or cameras on phones or even those toasters that you see that can be hooked up to the Internet nowadays. All of those devices now are also attached to the internet, and they said that a lot of those were used in part of this attack today. So that's why it was so difficult for Dyn to fend all this traffic off at the same time, as it all came inbound all at once.
Very frightening. Thank you, Eamon, very much. Eamon Javers in Washington.
Well, Arizona usually votes Republican, but this year it is a battleground state for a change, and it is at the center of one of the most controversial issues of this election season, immigration. Contessa Brewer reports tonight from Phoenix.
At Digital Airstrike, a social media marketing and brand reputation company, CEO Alexi Veneri worries about the ways a Trump presidency might affect her business.
There's a lot of need to do more business outside of the country. It absolutely concerns me if he was, became the guy in charge to make some of the decisions and to follow through on some of the threats that he's made. I do see them as threats, and that concerns me. It worries me it could limit our ability to do that and ultimately could hurt our job creation.
Arizona's a red state. It's only voted for a Democrat for president once in the last 68 years. Now, Hillary Clinton's leading Donald Trump by 5 points in the Arizona Republic poll.
When I see the tied numbers, that's astonishing to me that we're even that close, but we are. And then it comes down to who do we get out to vote? Are we going to get Republicans out to vote more?
The Arizona Republic endorsed Hillary Clinton, the first Democrat in its 125-year history. The newspaper was bombarded by threats in response. But the editorial board reflects what's happening politically as conservative Arizonans denounce Donald Trump.
I don't think they like kind of the swaggering playboy lifestyle, the multiple marriages. That kind of rubs them the wrong way.
Arizona's Latinos have almost $40 billion in purchasing power. And statewide, almost 15% of all businesses are owned by foreign-born entrepreneurs.
The closer you get to the border, the less they want a wall. The people who actually live down there, they're concerned about border security, but like just building a kind of a medieval style wall or whatever exactly Trump is talking about is not what they're looking for.
As Trump's support has lagged, his accusations have increased. He calls the election process rigged.
Is there any possibility this election is rigged?
I can tell you in Arizona, nobody knows what the vote is going to be except for the voters.
In Arizona, the voter registration system was hacked, but not compromised. Arizona business owners are looking for growth and stability, even if it means higher corporate taxes.
Well, I'm always looking for ways that we can reduce the size of government and taxes overall as a business owner, but ways we can really stimulate the economy and help us as a business owner, ultimately create more jobs.
Alexi Veneri is hoping for a future worth cheering for. For Nightly Business Report, I'm Contessa Brewer, Phoenix, Arizona.
Honeywell posts its first profit drop in 5 years, and that's where we begin tonight's market focus. The conglomerate said weakness in its aerospace division caused the decline, but the results were still better than expected. The company also said it expects earnings for the current quarter to rise by double digits. Shares finished the day up fractionally to 108.96. Moody's said it expects the Justice Department to file a lawsuit against the ratings agency over alleged violations related to the grading of mortgage bonds and other securities in leading up to the 2008 housing crisis. Moody's also reported an increase in quarterly profit and revenue, prompting it to raise its full-year earnings outlook. Shares fell 5% to 102.24.
The mobile network equipment maker Ericsson posted a loss about a week after warning that its quarterly earnings would be nearly wiped out. Sales also fell, with the company citing a weak telecom equipment market and stronger competition. Shares off 5% to $5 and a dime. And a strange day for luxury retailers Coach and Burberry. First, there were reports that Coach was working with an investment bank on a potential merger with Burberry. Then later in the morning, different reports came out and said the two companies were not in active talks. Shares of Coach fell 1% to $35.55.
Our market monitor likes cloud computing and social media companies. He has names of companies that he says reflect the new reality of tech. Last time he was on, back in December, he recommended Amazon, which is up 22%, Facebook, which is up 24%, and Workday, which is 10% higher. Joining us now is Mark Lehman. He's president of JMP Securities. Nice to have you back, Mark. Welcome.
Thank you. Thanks for having me.
So the new reality of tech, what do you mean by that?
The new reality of tech really tells a couple stories. One is you have cloud computing, which is what we saw in the Microsoft report, and companies like Salesforce and Amazon are going that way. And also, obviously, social media and what we see in companies like Facebook and others. And that's the new reality of tech. And you need to play in those large growing markets. And if you're not, you're probably stagnating and not growing the top line and the bottom line.
You still like Facebook. Tell us why you're so hot on Facebook.
I do. I think they've had a tremendous year. I think they're monetizing their subscribers in a great way. Obviously, there's over 1 billion people who check their Facebook. I like to call it the World Cup finals every day. 1 billion people check their Facebook every day. Instagram now has over 500 million users. And I think that kind of active user base and that kind of action on their two platforms is growing, and the amount of time that are on those platforms is also going up. And advertisers crave that kind of attention and that kind of demographic, and that is not slowing down. And although the stock is coasting towards an all-time high near 132 today, you usually get an opportunity when people worry that growth is slowing and worry that the margins are unsustainable. And I think those are the times you want to pick up shares of Facebook.
Okay. Next on the list is Microsoft, which had a big pop the other day on its earnings, which blew past Wall Street estimates. Would you still buy it at this point? given the price move it's had recently?
Yeah, I would. The stock eclipsed its 99 high, which is really a seminal moment for the company. They've really reinvented the company over the last few years. They still own the desktop. That's a term we don't use a lot anymore on Wall Street, but they still own that market. But their move to cloud computing has been rapid. They're investing in the data centers and in the cloud, and I think they're doing a wonderful job of getting there. As more of that business starts to mature and their kind of growth accelerates, you're going to see a multiple expansion there. Tied with the EPS move, you probably will see growth in that stock. And again, they pay a dividend, which is kind of a rarity for a high-tech, high-growth company. And that's a really important thing for dividend growth managers who get both that dividend and also get the kind of growth that we saw in the last quarter.
Everybody's got their eye on Salesforce, most especially because of rumors that they may do some big acquisition. You like the stock. How worried are you that Mr. Benioff goes in and buys a big company and may pay a lot of money for one?
He's going to buy something, okay? Probably the most interesting thing of this campaign season was when we saw Colin Powell's email talking about the Salesforce playbook. It was fascinating to me. It was fascinating to my analyst, Pat Walravens. But what the stock has done in that rumor of the last 3 or 4 weeks has gone down by about 15%. And I think nobody has done a better job of moving their customer towards the cloud. Nobody's done a better job than Mark Benioff at running his company. And I think right now you have a maximum amount of fear that they're going to do something that is detrimental to the stock, and they're going to do quite well. And I think that's a stock you want to own going forward.
We have to leave it there, Mark. Thank you. Have a great weekend. Mark Lehman with JMP Securities. Coming up, the sweet smell of success. Meet the woman who's lighting up the fragrance market one candle at a time. Tonight's How I Made My Millions is next.
The prestige beauty industry in the U.S. grew to $16 billion last year, partly on the strength of so-called luxury candle sales. They were up double digits. One company cashing in is Nest Fragrances. In tonight's How I Made My Millions segment, we check out the business sense of Nest's founder, Laura Slatkin.
When Laura Slatkin picks up a scent, she knows a winner when she smells one.
That's it. Yeah.
She proved she had a nose for business back in 2008, the day she launched Nest Fragrances, her brand of luxury aromatic products for bath, body, and home.
We sold 1,000 candles on one day, and I screamed at the top of my lungs because I knew that we had a hit on our hands.
Still, Nest is not what you'd call an overnight success. It's more like the culmination of decades spent learning the intricacies of an industry she helped pioneer, a business she unwittingly married into when she tied the knot with Harry Slatkin.
Harry's brother, Howard Slatkin, is a world-renowned interior designer. And he had this beautiful shop on East 70th Street. And he asked Harry and I, would we like the shop as a wedding present? And we looked at these charming little candles that he made, and we said, wow, wouldn't it be cool if we started a home fragrance company?
In 1992, they did just that, quitting their well-paying Wall Street jobs to found a scented candle concept called Slatkin & Company out of the interior design shop.
We actually used the cash flow from the shop to manage the initial business. And remember, we were fighting the fact that it wasn't really an industry.
13 years later, the Slatkins were selling products exclusively in high-end retail stores and reportedly bringing in $15 to $20 million in sales annually. Nancy McKay, then an executive at Estee Lauder, took notice.
I believe they are the reason that home fragrance is growing the way that it is today.
According to a study by the market research firm the NPD Group, sales of prestige fragrance candles are up 18% and reed diffusers up 36% since just April 2015. But Slatkin & Company was attracting attention more than a decade before that. Namely, Limited Brands founder Les Wexner, who bought the home fragrance business in 2005 for an undisclosed amount and hired Harry.
And so Laura was actually faced with a challenge.
I was really worried about my husband, whether he would really enjoy working for a large company. So Nest Fragrances started as a backup plan.
The company also began as a private label business, with Laura creating home fragrance collections for more than 80 luxury brand clients, while she waited out a 3-year non-compete agreement.
We kept launching brands, one after another, and some of them did okay. And when we launched Nest Fragrances, it was an enormous immediate success.
I'd seen it in stores and I'd smelled it, and I just loved everything about the brand.
So much so that in 2015, McKay left her nearly 30-year career with Estee Lauder to become Nest's CEO. She says sales are thriving.
At retail, we do between $50 and $70 million.
Slatkin advises other would-be entrepreneurs not to get thrown off the scent of a potential success.
Whenever you're faced with an obstacle, it's how do I get over it? How do I get around it? How do I solve it? And how do I move forward? You can't get drowned in the challenges that are presented to you, because they're sometimes daily.
Nest Fragrances almost never happened after the Slatkins sold their first company. Laura thought about devoting her time to New York Collaborates for Autism, a nonprofit the couple co-founded in 2003 after their son was diagnosed with the disorder. Instead, she decided to do both, and very well.
Yeah, very well indeed. All right, that does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for watching.
And thanks for me as well. I'm Tyler Mathisen. Have a great weekend, everybody, and we'll see you back here on Monday.